Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. And today we're diving into Simmons First National Corporation's latest report. We're going to try and figure out if buying more shares is a good idea or if we should run for the hills. Make sure to subscribe for more insights like these and join our Discord community linked in the description below to join the conversation. Alright, so what's the big news from Simmons First National Corporation? Well, it looks like they had a major stock sale that just wrapped up. Think of it as them selling a bunch of their company's ownership pieces called shares to raise a significant amount of money. First off, let's get the basics straight. This report, filed on July 21st, 2025, is all about a big event for Simmons First National Corporation. This is a bank holding company, meaning it owns a bank and other related businesses, and it's based in Arkansas. They're publicly traded, meaning anyone can buy a piece of their company on the stock market, specifically on the NASDAQ under the symbol SFNC. The core of this report is a deal called underwriting agreement. Now that sounds fancy, but it's just the official contract for selling a large chunk of company stock. In this case, Simmons First National Corporation agreed to sell over 18 million shares of its Class A common stock. This isn't just a small sale, it's a significant event for any company. Let's talk numbers, because that's where the real story is. They sold these shares to underwriters, which are basically the middlemen who then sell them to the public. The price they sold it for to these middlemen was 17.5 to 75 per share. Is what the underwriters make for their 75 per share is what the underwriters make for their services. It's a small but important detail in how these big stock sales work. So how much money did Simmons First National Corporation actually bring in from this sale? After all the fees and expenses were paid, they were looking at a cool $320, a huge amount of cash to inject into the company. Now, what are they going to do with all this money? They say it's for general corporate purposes. That's a pretty standard phrase, but they give us a hint. They might invest it in their bank, Simmons Bank. This could be to help strengthen the bank's financial foundation tune-up and to fuel future expansion and growth. This tells us they're looking to grow and potentially make their core banking business even stronger. This sale was all done using a pre-approved plan with the SEC called a registration statement. It was put in place back in May 2024 and then updated with more details right before this sale. This means they followed all the official procedures to make sure this stock sale was legal and above board. Just like any big contract, this underwriting agreement has all sorts of promises and protections for both Simmons First National Corporation and the people buying the stock. These are pretty standard clauses, essentially saying what each party guarantees and what happens if something goes wrong, especially concerning the laws about selling securities like stocks. This is basically legal insurance for everyone involved. And to top it off, they got their lawyers, Troutman Pepperlock L, to give a formal stamp of approval saying that the sale of these shares is completely legal. This legal opinion is also part of the filing, adding another layer of official verification. Let's zoom in a bit on what exactly they're selling. It's their common stock, and each share has a face value or par value of just 1 cent. This par value is mostly symbolic and not really reflective of what the stock is worth in the market. What matters is the price they're selling it at, which we talked about being 18.50 fin for the public. Now, here's a crucial part that you'll see in almost every SEC filing. They include a cautionary statement regarding forward-looking statements. This is their way of saying, hey, we're talking about future plans and expectations, but remember, things can change, and the actual results might be different from what we're saying. They list words like anticipated, believe, expect, and potential as indicators of these forward-looking statements. It's a standard legal disclaimer to protect themselves from lawsuits. If their future predictions don't come true, they specifically mention that they might not update these statements unless required by law, so it's always good to check for newer information. Finally, the filing lists all the supporting documents called exhibits. These are the actual legal contracts, opinions, and other papers that back up everything they've stated in the report. It's like the appendix to their summary. We see the underwriting agreement itself, the legal opinion from the lawyers, and even consent from those lawyers, plus some special computer-readable data for the SEC systems. Okay, let's shift gears to what this means for investors and the company's future. Simmons First National Corporation just raised a significant amount of capital. This is generally a positive sign, as it means they have the resources to pursue strategic goals like strengthening their bank or expanding. However, the market's reaction to this news will be key. They sold the shares at $18.25. The money can fixate, so the market will tell us if that's seen as a fair price. If the stock price holds steady or rises after this offering, it suggests investors believe in the company's future and its plans for the money. But we need to remember the risks. They mention using the money for balance sheet repositioning. This could mean they're dealing with some financial challenges or want to improve their financial structure, which isn't always a sign of perfect health. The overall economic climate, interest rates and competition in the banking sector are also major factors that will influence how this money is used and whether it leads to the growth they envision. Think about the banking industry. It's highly regulated and sensitive to economic shifts. If the economy slows down or interest rates change dramatically, it can impact a bank's profitability and its ability to lend money. Simmons' First National Corporation's strategy to invest in its bank to support growth is a smart move if done correctly, but it also means they are betting heavily on the performance of their core banking operations. Looking at this filing, the immediate takeaway is a significant influx of cash. The company has a plan for it, focused on strengthening its bank and expanding. The success of this plan will depend on many external factors and internal execution. It's a move that shows ambition and a need for capital to fuel that ambition. They've equipped themselves with funds and the necessary legal clearances. Now it's all about how effectively they deploy these millions to generate returns for shareholders and improve the company's position in the long run. So what's my take? Simmons First National Corporation has made a strategic move to bolster its financial position and fund growth. The $326.9 million infusion is substantial and signals a commitment to reinvestment. The key will be how they execute their plans for Simmons Bank. If they can effectively manage their balance sheet and identify good growth opportunities, this could set them up for a strong future. However, the banking sector is always fraught with risks, and their mention of repositioning suggests they might be addressing some existing challenges. It's a calculated move that could pay off handsomely, but it's not without its potential pitfalls. Keep an eye on their subsequent financial reports to see how this capital fuels their performance. Alright, that's our breakdown of Simmons First National Corporation's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.